Good morning, friends. I'm Ritu Jhunjhunwala and I'm back again with my second series on financial knowledge for women and young children. So, last time I spoke about why women shy away regarding talking about investments, wealth, finance. There are two reasons for it. One, they're scared, and second, they are not confident to talk about or take any financial decision. And this is why? This is because they lack interest and they lack knowledge. So in my second series, I'm going to talk about small things which you should know and gain knowledge about investments. So we have been making investments. Definitely, our family members have been making investments, and we have heard about a lot of investment products. And the most famous one is fixed deposit of any banks or any corporates. But I don't think anybody invests in fixed deposits unless you don't have knowledge about any other products or you don't want to take an initiative to go and explore of what are the other investment avenues which is available in the market. Next, most favorite of all females, we buy gold jewelries. But then that is not a real investment because you want your investments to grow, and when you need money, you can break it, you can use it. So liquidity is important. When we talk about gold, it's like sentimental value is there. So some extent in gold is fine, not proper investment. Then we make investment in real estate. If you're a salaried person, we go EMIs and all. But then these are again very, very long-term investment, and then liquidity becomes a huge problem when you don't find the right kind of buyer at the right time. Next is shares. When you make profit in shares, it's perfectly fine, but you should know that you can make 50% or more than that loss also. You can lose huge amount of money. So if you have time, knowledge, expertise, then please invest in shares. Or at times, we lend money to family members or to our friends at a very high rate of interest. But जब वो पैसे हाथ से निकल जाएंगे, then you will be at total loss. So better don't give at a very high rate of interest. Make the investment at low rate, but then it should be safe. Now, where do we get a product where you have the safety of your investments, you have liquidity, you have expertise, of a fund manager, or it is very convenient to manage, you don't have to give entire time? The only answer to all these things is mutual fund. So now, what is a mutual fund? Mutual fund is not another investment avenue. It is just a tool to make investment. So mutual fund is a trust which makes investment for a large number of investment according to their pre-specified objective. Now, what do you mean by pre-specified objective, large number of investors? So let's say the different markets. You have equity market, you have debt market, you have money market which provides you liquidity. So I'll speak about what are these different markets. But at least you know what are shares, what are bonds. So what does mutual fund does? So there is a fund manager who manages money on behalf of all the investors. They pool in money from like-minded people. Let's say if somebody wants to invest in equity shares because they want to take high risk and they want to earn high return. So the fund manager will pool in money from all these investors and invest in different categories of shares, large cap, mid cap, small cap. Then there are investors who would like to be very safe, earn regular income like monthly, quarterly and all. So for them there is another investment product, this is within mutual fund, which is called debt funds, which are very safe, and they can give you kind of a fixed return on a monthly basis or a quarterly basis as and when you want. Then there is one kind of investors who wants to park their money for, let's say, 3 months, 6 months or 9 months, and they want very easy liquidity for any kind of emergency. So then the money will be parked in liquid fund. There are many more options, but I'm just covering the basic, these three right now. So let's say if you have kids, you want to make investment for them. So you make and since this money would be for a very long term, you can make an SIP in mutual fund. Now, what is the benefit of investing in mutual fund? There are various benefits. Now the first one, the most important, it is very convenient. There are not too many paperwork required. You just need to do a KYC and then you need to fill up a form, or you do it online and the investment will be done. And then you can, get your portfolio, or on the NAV basis you can understand. Second is, might be you are investing only 1 lakh rupee, or let's say 50,000 rupees, or whatever amount you can think of. If you buy a bond or an equity or make a fixed deposit, your money is going to, let's say, one particular share, or let's say 10 shares with that 10,000 rupees you can buy. But then when you're investing this 10,000 rupees of yours through mutual fund, in equities, equity mutual fund, this is getting diversified over 100 shares. So tomorrow any problem happens with one of the companies which has only 1% exposure in your fund, it will not impact your fund to that extent. So you're safe. Second, it is very tax efficient. When you make an investment yourself, you pay generally higher tax, but when it is through mutual funds, as the fund manager buys and sells on a regular basis, it will not impact you. So let's say if you sell after 1 year, it will be long-term capital gain and it will be less taxation. Then your funds are being managed by experts. We might not have that enough kind of knowledge, time, or even the inclination to put our head into that product where we have invested. So the mutual fund manager manages everything for you. He takes the right decision when to enter, when to exit. He will do it. Then convenient, how convenient it is. Whenever you want to invest in mutual fund, you can make an investment. Whenever you want to withdraw, you can withdraw. It's like a bank account for you. Let's say you invest a lakh rupee today, and in 10 days you need 10,000 rupees. So you can withdraw it. After another few months, or let's say few days, you receive some gifts and some funds. You want to deposit that 15,000-20,000 rupees back. So you can again invest it. So you can operate the way you operate your bank account, as if it's your own bank account, your own money. The only benefit is that in a bank account your money doesn't grow. Here your money is growing on a regular basis. Another thing is that the cost of mutual fund is much less. It's very cost efficient. So mutual fund is also one of the safest investment avenue. When you make an investment in mutual fund, the fund has to go only from your account. It cannot go from your husband, or from kids, or from your family or friend's account. So if I am Ritu, the money has to go from Ritu's account. The investment will be made in Ritu's name. You can have a second applicant, but you will be liable to pay tax. You will make the benefit out of it. Secondly, when the redemption, that means when you withdraw the money will only go to your specified account. It cannot go to my family member's account, or my spouse's account, or anybody for that matter whom you want to pay. So the money goes from your account, it comes back only to your account, the specified account. If you have 5 different banks, it will not go to 5 different banks. If you have, let's say, mentioned HDFC Bank account, it will go back only in HDFC Bank account. So mutual fund is again the safest. In mutual funds, you can make lump sum investments, and at the same time, you can make a regular investment also. You can make a regular investment through SIP mode. And SIP is the most favorite of all the investors at this point of time, especially salaried people or even businessmen. They can make planned investment on a regular basis, and you don't have to make investment on a daily basis. You just sign a mandate, and automatically your account gets debited on that particular day, every month or every quarter or every week, whichever way you want. So it's really convenient, and you would not even realize that when your money has grown. Let's say I've been investing 10,000 rupees every month in an SIP. So in 1 year, you've already invested 1,20,000. In 5 years, you've already invested 6-7 lakhs. So this is only a capital money. And in 5 years, we know that if market has done very well, you can make 15-20% return on that. So even if you earn very less return, you know that you have already collected 6-7 lakh rupees, and you don't even realize that where the money has come from. So this is the power of SIP. I'm going to talk in much more detail about what is SIP, which is Systematic Investment Plan. What is SWP, which is Systematic Withdrawal Plan, like the way you make investment on a regular basis. If somebody wants money coming into his account on a regular basis, on a monthly basis, that can also happen. Then there is something called STP. And there are many features of mutual fund, and believe me, it's one of the most convenient investment avenue anybody would like to get into. There is no hassle, it's easy to manage, and gradually you start gaining knowledge also. So thank you so much. I'll cover, as I mentioned, these 2-3 things in my next session. So please join me once again. Thank you so much.